everyone, TG here with Simpler Trading, and it is May 21st. It's Tuesday. Wanted to give a little bit of a market update and outlook since it's been, well, the last few days have been kind of crazy, right? We all know that it's been news-driven, and we know that there's a lot of stuff going on with tariffs, and then this last one was about Huawei. So we're just going to see if there's some technical stuff and some technical readings that we can incorporate to kind of get a little bit better idea of where the market is going and what is happening. So the first thing I wanted to do was to take a Fibonacci retracement and go high to low and show that the 618 retracement is exactly where price ran into. Now, fortunately, that doubles up with a few other things that in my world and through my eyes that I look at. So the daily chart is on the left, the hourly chart is in the middle, and the 15-minute time frame is on the right. And so what we can see is when price decided to turn around and come back up, it hit that 618 retracement, but that's also the same as the hourly 200 SMA. And if we look at the daily chart, we can see right here that the wick did go up to the 618, but the body of the candle stayed underneath the 21 EMA. And that is a common theme that I usually see. Now, the other thing that we'll notice, and we'll kind of talk about this here, and I've made a Dear Simpler video about this, is the elf shoe pattern. And so what we look at is on the daily chart in the top left, you can see my cursor. Actually, let me get rid of the Fibonacci first. So if you look at this, this is your leg coming down. Here's your heel, and the heel is usually the low point of the elf shoe pattern. It's kind of the double bottom, something like that. And then you have the arch of the foot, and that usually goes to the 21. And then we come back down here to retest the lows as the double bottom, and that is the ball of the foot. And then what we're looking for is some sideways consolidation, and then we get that elf toe. So just imagine what you see on Santa Claus's elves. You see that curled up toe, and that's what we're kind of looking at for through here, because this is what I believe that we're seeing. Now, the whole point of the elf shoe and that double bottom formation is to narrow the distance between the 8 and 21. So here, this blue line is the 8 EMA, the orange line, the red line is the 21 EMA, and what you can see is back in here, the 8 was below the 21, so our near-term trend is down. Now, the whole down, up, and down, that is supposed to bring the 8 and 21 closer together, and what I call that the moat. So right here, you can say that the distance between the 8 and 21 is pretty far, and then now we get this whole movement here to where this sideways chop, and I do expect we're going to get chopped the next few days or so. The 8 and 21 should move closer to where eventually the 8 can cross back up through the top side and cross over the 21. So then if we take a few things and we look through my eyes and the kind of trading that I do using the Moxie indicator, we have what's called an out-of-phase condition. So here on the daily chart, we have price below the daily 50, and the Moxie indicator is still above the 0 line. And that's not supposed to exist. If the Moxie indicator is above 0, price should stay above the 50. So I like to call this a trampoline move, and it should act like a kind of a buoy and help push things up. That being said, on the hourly chart a few days ago, what we had was price above the hourly 50 and the Moxie indicator below 0. So that shouldn't exist. It's the same thing, just reversed. And then we can also see some divergences. So if we take their line and we look at the 15-minute, we have price coming down like this, and we can see that the Moxie indicator was generally trending up, but it was very messy, so there wasn't anything to actually act upon. The soonest that I ever go into a position is when price starts to engage and follow the 15-minute 50 up. And what we can see is that's what happened in through here. It took a little bit of moving around and a gap to do that, but it engaged with the 15-minute 50 and then ran up into resistance, which we then explained on the hourly chart and the daily chart. Now, coming back down to where we are currently, we came down here, retest the lows. Now, some interesting things. We have price back above the 15-minute 50. And what we can also see here is the 200. It's kind of the orangey color line. And what we noticed in the past is that the 15-minute 200 was trending down. Now the 15-minute 200 is actually flat in about the same place as the 15-minute 50. So now we have price over that. What I want to see, maybe it's tomorrow, maybe it's in the next couple days, if we're going to be going up from here, I want to see price start to engage and respect the 15-minute 50 and actually start following this up, much like it did last week, right in through here. And then what that would also be nice is if we could see price generally stay above the hourly 50 and kind of maybe grind or chop its way up a little bit. Now keep in mind, anytime right here that price is above the hourly 50 and the Moxie indicator is below 0, that shouldn't exist. And so price can move, but it may not be a very good sustainable trend right now. And what I'll show you are some examples in the past here. So let me get these configured. So what you'll see back here, actually let me zoom in a little bit for you. So notice here we had our dip. So price came off the hourly 50 into the 200 and then came back up. Notice in this section, and I'll draw a line on it right here. See how price is above the hourly 50, but notice how the Moxie indicator was lagging. It was still below 0. So this was all an out of phase condition. Price should not be above the hourly 50 when the Moxie indicator is not above 0 yet. And sure enough, we got some wiggle and then we got a collapse, and that's what it took to actually get this to try again. So that's why if we bring it back to where we are right now, we have price that's been trying to stay above the hourly 50, but the Moxie indicator is still below 0. So while I don't like it entirely, it doesn't mean that a move can't happen. And then we kind of blend that also with what we're seeing on the daily chart and the fact that price is below the 50, but the Moxie indicator is above 0, that this should actually be pushing itself back up. So I know it sounds like conflicting things, but what I'm expecting is price to chop around, get reconfigured, but generally probably grind up in an upward direction. And I want to be using the 15-minute moving averages with the 50 and the 200 to help guide me along with that to see how that actually might pan out. So with all that being said, I think that the market could trend up for the next few days. It's not going to be probably the cleanest thing. It's going to be highly susceptible to news. And then also keep in mind that we have a 3-day weekend. I'm not sure how many people or institutions really want to load up on long positions going into a 3-day weekend that who knows what can happen. And so my bias is to the upside, but it's gently to the upside. As long as the market kind of remains neutral to up, I think that individual stocks will be taking that as a cue that they can kind of start moving up as well. And then we'll have to kind of wait and see what happens after the 3-day weekend, if it's going to give us a more substantial resolution to this chop that we are seeing here, because we are kind of in the middle of nowhere. But as I said, bias is up to the upside. Another thing that I wanted to incorporate in my bias here is this is the advanced decline volume, so 4.95 to 1 on the NYSE and almost 4 to 1 on the NASDAQ, and this has been steady all day long. We still have maybe an hour and a half till close, and so this is what I want to show. You can't quite see it here, but yesterday volume was negative, but it was very light. It was maybe 1.5 to 1. Maybe towards the end of the day it was about -2 to 1, but it was very, very light negative volume yesterday. And this is fairly good sustained buying power, buying volume. And so this is also factoring into my generally upside bias, and I just wanted to include that so that people could see some other metrics that I'm incorporating into this. So good luck out there, and just keep it safe. It's going to be a challenging week.